Is it better to keep an old disability policy with a good price that is not strictly own occupation, or get a new one? I'm now 48, and the premium difference is greater than 50% of the premium to get a true own occupation policy. And the second related question is, should I drop my Northwestern Mutual disability insurance that I just bought recently? Obviously, that's also not a true own occupation policy. So can you talk about what to do if maybe you didn't buy an own occupation policy, what to do now?
Yeah, it's a great question. So I do think that this comes into the whole realm of financial planning. I mean, if you're 48 years old and the difference is going to be huge, and that's just based on age. If your health has changed at all, you might end up in a position where it's even bigger than you're thinking, or you may be denied the ability to get another policy. So, a lot of times the answer at that point in time is, well, if you've got enough savings, you paid off all your debt, you're in a good position where if you got disabled and they only paid you a portion of the benefit on top of the savings that you have along with no debt, and you could live off of that portion plus your savings with no debt, if everything's lined up that way, then maybe it's worth keeping and not paying more for that. On the flip side of that, you're also entering the years where, I mentioned a statistic earlier on, something like 1 out of every 5 doctors over the course of their career gets disabled. That's coming from, not a whole lot of doctors in their 30s and a whole bunch of them in their 60s. And so the older you are, you're also more likely, that's why it's more expensive, to experience an event where you become disabled. And so, it might be one of those things where you say, hey, my savings aren't where they should be. Maybe I just bought a house and I've got some debt that I've taken on. Maybe now is the time to pay a little bit more to make sure that I've got this true own occupation coverage. So if something happens, I'm not dwindling away the savings that's not even where it should be, and I can't pay this debt. And, so I hate to sound like a politician and ride the fence and say it depends on the financial situation, but it really does. But I hope that at least gives you some idea of things you should be thinking about. What happens if I get disabled? Do I need to have all of my income paid to me, or can I take something proportionate from one of these policies along with what I've saved if I'm in a good position with no debt? Or if that's not the case, maybe it's worth paying more and switching to a true own occupation policy. One caveat though, never get rid of a disability policy until the other policy's in place and the first payment has been accepted by the insurance company. That's when it becomes in force, is when the first payment's been received and applied to your policy. Otherwise, doctors in the past have gotten rid of their old policy and then went for the new one, only to find out in some set of labs they had to go through because they were older that they maybe couldn't get coverage, or it was twice as expensive as they thought it was going to be. You should always hold on to that old policy until you get the new one completely in force.
That's good advice.
And Northwestern Mutual, I can jump to that really fast. It's kind of the same thing. If you just bought one, though, and you're young and you're healthy and you probably have discount opportunities, don't get rid of it till the new one gets put in place. But I would absolutely consider swapping. I think the difference, first of all, the price difference, you may end up saving money by switching to one of the true own occupation policies. I'm going to say most of the time doctors save money when they switch to one of the big 6 true own occupation policies from Northwestern Mutual. They're typically expensive, or you're on a graded premium with them and their steps up pretty heavily. So I think you will potentially save money and get a better policy if you just bought that one. If it's been years and years, that can be different sometimes, but if it's just happened, it's probably a good idea to switch.
Do you want your questions answered by the White Coat Investor? Record your question at whitecoatinvestor.com/YQA or click the link in the description.